What's up, everyone? It's Jason here. Hope you had a great day today. Today is going to be a very filled video. We're going to start out with a recap today on AMC. And then we're going to go over this new DTCC lawsuit going on with Citadel and others. And to end it, we're going to go over what Gensler said today, what they're doing right now to review payment flow orders. If you could, make sure to smack the like button down below. It helps out this video, helps out more people learn about AMC, and gets people informed. And if you're not a sub, hit that sub button below, hit that little bell notification, and let's get right into it. Quick note, if you want to know what I am using Webull. There's a link down in the description below. If you sign up on the Webull, put $100 in, you get 2 free stocks worth up to $1,800, free money, and you get these tier 2 NASDAQ views right here. See orders coming in and out of the market real time. Well, as you can see, today wasn't the best day out there. We did end at $49.34, negative 10.37%. On the aftermarket, though, we did fell a little bit more. We fell right at 4% right now, right at another $2 in aftermarket. You see this right here, and then we've kind of leveled out since then. Now, if you go back over here, though, and look what happened right here, we did fall throughout this day, and the next day we kind of lunged forward. I do think tomorrow, if the CPI data and everything's going great, and with all the new data we got today from Ortex and from AMC alone and Adam Aaron, I do think tomorrow's going to be a very nice green day, kind of like the day after Friday going into Monday right here after that big drop down. I do think we can see that same scenario, and maybe we can get AMC back above the $55 going to $60 level again tomorrow. Again, you have to have everything line up good. We did have some really good numbers coming out from Ortex today. We're going to go over those. We had some really good news come out from Adam Aaron and AMC. We're going to go over those as well. We've also had some crazy stuff come out about some DTCC lawsuits and Gensler and them coming out about the payment order flows and info coming out on that and how the SEC is going to be looking at it as well. These are all things that can help out AMC. So we're going to break those down. But today we did start out going into the market hours right about $52. And like I said, we did end at $49. Again, a negative 10.37%. We fell most of this money right here going into the pre-market hours today. It's when we had that big drop. And then in aftermarket hours, we dropped another 4%. We do have about another 30 more minutes, though, because we could see some more lifting before the end of the day here. We got about 25 minutes left here in Nashville and trading, because it ends here at 7 p.m., 8 p.m. Eastern, obviously. All in all, man, we had a lot of attacks today from hedges as well. You can see these ladder attacks happening one after another, especially going into the aftermarket hours. We've seen this big dump. Tomorrow, we do have the CPI data coming out. Those things are good, and everything we've known so far, I think tomorrow's going to be a very good day for AMC, and maybe we can see us get maybe close back over to the $55 to $60 range again. Speaking of options, really quick, I do want to say if we do make it back to the $50 mark, which I do think we will, we'd have another 16,000 in the green right here. Now, there's lots over through here that would be in the green, obviously, all the way way down here. And then maybe if we can get back above $60, we have almost 30,000 right there in the $60 range that could get us back into for Friday. We got 2 more days on Thursday and Friday. $55, we have almost another 15,000. So these right here would be great to get back up into the zone. I think we can, especially if the CPI data tomorrow is great, knowing on what we've heard today. Now, going over these I-borrowed death numbers, I would take these right now with a little bit of grain of salt, because I do think they're using some of these options right now to so and call cover their shorts. I think these are kind of skewing numbers right now. So the fees right now, though, we have are currently at 3.5%, and that's the interest fees, by the way. That's an APR. So don't worry about that too much. These numbers do fluctuate up and down. Available, though, right now is 3.8 million. Now, earlier we did have 7 million for like 15-20 minutes, and then it dropped really quick. And the reason why I think we're seeing that is because of those fake covers we're going on right now. Going over the trade alerts really quick as well, we did have one large print order come through today for 560,000 shares for the price point at $52.19. And that was this morning at 9:30 p.m. for right around $29 million. That's the only large print order we had come through today. So speaking of Ortex, we did have some really good news come through today. For May 28th, the exchange is reporting short interest in AMC as 102.3 million shares. This is a larger number than expected and indicates a higher than anticipated short interest in AMC. Huge news for that short interest that has been wink, wink going down, which we knew it hasn't. This right here, expect, just shows that the short are way, way higher than it is. The unexpectedly high short interest implies that the shares returned in this period were atypically not shorted shares, but instead shares that were borrowed, not shorted. This reaffirms short shares have not been returned yet. Again, great news from Vortex. Says we will update the estimates tomorrow based on the latest exchange release data. You will see the full details here. We'll bring those numbers tomorrow. The reason why I didn't bring up all the Vortex numbers today, I do think these numbers haven't been right. Obviously, it's not Vortex's fault. They're just showing what's coming in from other sources. Hopefully tomorrow we get these numbers, and I think they're going to be more right. We'll see, and I'll bring those numbers to you tomorrow for sure. Christian Andrews said today, I'll let you in on a secret. When brokers are forced to report SI, their algos only catch the shares classified as short. Other shares have been manipulated to read long. Remember, we talked about this yesterday in the options right here. They're using this options pool to cover long shorts, right? And the system doesn't pick it up. Vortex and others are playing a game of telephone. My guess, SI equals 45+%. And I've said this plenty of times myself. I think that the short float is probably 50% plus myself. Again, I would love to see these numbers. I would love to see these long shorts, so-called, and naked shorts. It's going to be astronomical, man, when they start having to buy back in eventually, as long as we hodl and keep on going. So Adam Aaron also tweeted out, as of June 2nd, AMC had 501,780,240 total outstanding shares. AMC's number of shareholders in the U.S. and abroad has increased to about 4.1 million. And you own about 80% of AMC, aka retail. He's saying retail owns about 80% of this. I think it's honestly higher than that. While some own more and some own less, the average stock holding for AMC is about 120 shares. I would like to know everything, right? I want to know everything about this, like how many institutionals, right? Shorts. Like, I want to know all these numbers. And obviously, this right here really leads you to believe there is a large mass of naked shorts out there. Just counting on these numbers he put out there, the 501 million shares out there. Man, it has to be a ton, especially if even at his numbers, owning 80% of float. I think we own 95+% of the float. But again, just by those numbers, because I don't think we got everything here, though. Just by those numbers, the naked shorts have to be outstanding, like crazy high. I can only imagine. That is, this right here just retells you, man, hey, look, we're on the right path. And remember why you got in this in the first place. So obviously, AMC Holdings announces their shareholder count. So fulfilling a commitment to release share count data, AMC Holding is today providing the following information. As previously disclosed, there were 501,780,240 shares outstanding as of June 2nd, 2021. The record date for the shareholder meeting scheduled for July 29th, 2021. As of June 2nd, there were ultimately 4.1 million individual shareholders eligible to vote in the upcoming shareholder meeting. Advanced voting will begin on June 16th, with most shareholders eligible to vote through the internet through 11:59 p.m. Eastern Daylight Time on July 28th. So if you guys don't get your material to vote by, let's say, July 4th, I would start contacting whoever you have as a broker and see if they can get you your voting materials. Even if you guys are somebody that doesn't usually provide that, I would honestly still bug the crap out of them. I do know some of you guys over in the EU and outside the US, sometimes it's hard. Like I said, I do know Resolute and a couple others do give you your voting stuff. Comment down below again if you guys are overseas and you guys get your voting material. That way, maybe somebody in the chat can see, and again, it helps somebody out. AMC's definite proxy statement will be filed on June 16th. Shortly thereafter, voting materials and a notice to the shareholders meeting will be sent out to individual investors. Such investors are encouraged to reach out to their brokers in the latter part of June or early in July if these materials have not yet been received from their brokers. I honestly just went over that, so I didn't even read that yet, but hey, we were ahead of the game there, man. Commenting on the share count. Now, this is what I just read about what he said as well, about how we, have 4.1 million individual owners, 120 share average, so on and so forth. Great numbers there. At least we got those out as well. Now, the next thing is this lawsuit, guys, on the DTC right here. I'll bring this up. Legal proceedings. Apex is a defendant in a series of putative class action arising out of the same alleged conduct captioned as Eisen versus Apex Clearing Corporation and Interactive Brokers LLC case. Now, the reason why you're seeing this right now is because Apex, if you guys didn't know, Apex is going to be going public through a merger for a $4.7 billion deal. So when they go through these things, they have to disclose everything. So again, Apex is going through a public merger with Northern Star Investment Corp, a publicly traded special purpose acquisition company, aka SPAC. So they're going through a SPAC deal worth $4.7 billion. So that's the reason why this right here is, again, being brought out. Everything has to be brought out if this happens. So for the Southern District of Florida, this right here is going through whoever's in here. Let me bring this down here and see if I can find this really quick. Go through this really quick in my eyes. I haven't really been through this a ton yet. Oh, here it is right here. So, filed in the United States District Court of the District of Minnesota in 2021, collectively the antitrust matters. So the plaintiffs allege that Apex, along with over 30 other brokerages, trading firms, and or clearing firms, including Morgan Stanley, E-Trade, Interactive Brokers, Charles Schwab, Robinhood, Barclays, Citadel, and DTCC, engaged in a coordinated conspiracy in violation of antitrust laws to prevent retail customers from trading freely in a conspiracy to allow certain of the other defendants, say primarily hedge funds, to stop losing money on short sell positions in GameStop, AMC, and other certain securities, which we obviously remember back in January and February, they stopped you being able to buy and sell, some longer than others. Obviously, there's a reason why Robinhood got so much hate, because one, they were the biggest one, right? Two, they stopped trading for longer than anybody, right? We had others stop for like 10, 20 minutes, and some stopped for a long, long time. The matters were brought as a class action alleging violations of federal and state antitrust laws, security laws, unfair competition, and dissemination of untrue and misleading statements, as well as negligence, breach of fiduciary duties, constructive fraud, and breach of implied covenants of good faith and fair dealing. These cases are in preliminary phase, although there can be no assurance as to the ultimate disposition of the antitrust matters. Apex denies liability to the plaintiffs and putative class members, believes it has meritorious defenses against the plaintiffs' claims, and intends to vigorously defend itself. This is honestly pretty good news, right? It's good to see, obviously some of these get somewhere. We all know that all these guys, again, work together sometimes. And at the end of the day, man, it's the reason why they call retail dumb money and them smart money. As I've always said, man, for a very long time, suits have ruled the market. Do I think times are changing? I hope so. I believe it, right? I've been in the stock market myself for 11 years. It's been this way since I've been in there. I'm sure it's been that way before. I can't, guarantee that because I wasn't in the market way before, but I've heard stories from other people that are in the market, before me. And I'm sure it has been the same way. The big guys rule the market, the retail traders, us, are the stupid people, and we have stupid money. And at the end of the day, man, they get away with a lot more than we could. If we went around doing what these guys were doing, mischief things, we'd be getting lawsuits. We'd be going to jail. Guess what they get, man? They might get slapped once every other year by like a couple $1 million fine. And at that point, they've made, $100 billion. So what's it matter? All good news there as well. So last but not least, this article ran from the Wall Street Journal, SEC to review market structure as meme stock stirs frenzy. The Securities and Exchange Commission is considering changes to some of the stock market's most fundamental rules in light of surge in trading over the past year by individual investors in meme stocks such as AMC and GameStop Corp. Speaking to an industry conference on Wednesday, SEC Chairman Gary Gensler outlined a broad examination of the market structure, including the high roll speed traders play in executing many small investors' orders and the rise of online brokers whose technology can entice people to do more trading. You know, it's been pretty crazy with Robinhood giving those little splashes when you do options and stuff, man. He's probably hitting them right there as well. Gensler, who took over the SEC in April, renewed his criticism on the system that sends many orders placed by individual investors to be filled by high-speed traders known as wholesalers, including Citadel Securities, Virtue Financials, instead of routing them to public exchanges. I think we've all went over this plenty of times. The order flow right now is terrible. The system known as payment for order flow benefits individual investors who are simply seeking to trade at prevalent market prices set at exchanges. According to the brokerage firms, wholesalers can offer such investors slightly better prices because their orders are small and don't move the market. Brokers say payment for the order flow is a form of customer segmentation, similar to how wireless companies tailor cell phone prices and contracts to customers' needs and willingness to pay. Mr. Gensler suggested that individual investors might get a better prices if the trading were done on public exchanges. Only about 53% of all trading in January were done on exchanges, while the rest involve wholesalers and broker-run trading venues known as dark pools, Mr. Gensler said. Now, I'll agree with that. I do think if we had an exchange, way better, so much better. The question is whether our equity markets are as efficient as they could be in light of the technology changes and recent developments. Mr. Gensler told the Piper Sandler Global Exchange and FinTech Conference. Brokers, traders, and some academics have said that U.S. investors benefit from the current system, citing data showing that firms such as Citadel Securities and Virtue Collective save individual investors billions of dollars a year. Bullshit! Oh, man. Payment for order flow has also made it possible for brokerages such as Robinhood and Mirror to offer zero commission trading. Still, the growing share of trades being executed outside the public exchanges, in part because the groundswell of individual trading activity has raised concerns about transparency. Now, this is all things we've talked about, man. We need transparency in the market. Lots of transparency. We need a ton of transparency. We don't get that, right? Especially us individual retail investors. We're pretty much left out in the dark. We do know, again, that we're not getting the best. Let's be honest, we're not getting the best prices. At the end of the day, man, you do pay in a commission-free. You're paying pennies every time you're trading like that. Pennies. They're pocketing things here and there. Nothing's ever free in life. We all know this. Obviously, having an exchange would make it a little more transparent. I think it'd be better for everybody. Let me know down below what you guys think about what he said right there on the trading and the order flows that are going on right now. I'd love to hear you guys' thoughts on that. If you could, make sure to like this video. Make sure to share this video. Comment down below what you guys all think, what's going on right now in the market. I will see you guys tomorrow for the live stream. Remember, hit that sub button below, hit that little bell notification. Join our Discord channel. Amazing people over in Discord. Love to have you guys over there as well. I'll see you guys in the next video, though. I'll see you star side. Peace out, fam.